The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A warm welcome to Squawkbox. I'm Steve Sedgwick with Karen Cho, and these are your headlines. Donald Trump reportedly mulling slashing tariffs on Chinese imports in another potential policy reversal. But the Treasury Secretary Scott Bessent says the country won't act unilaterally.
I get along very well with President Xi and I hope we can make a deal. Otherwise, we'll set a price and hopefully they'll come here and they'll contribute. And if they don't, that's okay.
The Kering crisis continues. Gucci first quarter sales come in far weaker than expected, sliding 25% as luxury shoppers cut back.
But elsewhere, Adidas bounces back, posting its strongest start to the year as the company's turnaround plan starts to bear fruit. BNP Paribas posts a Q1 earnings beat and confirms its guidance, buoyed by a record quarter for its corporate and institutional banking unit. CFO Lars Machenil tells CNBC the French lender is outperforming across all key units.
If you look, CIB this year plus 12.5% is basically a record, and it's up in all three divisions: global markets, global banking, security services. They're all strong.
And the numbers are in. More bad news for Tesla. Not just Tesla, Jaguar's up there as well, but Tesla is the eye-catching number as its EU car registrations almost halve in the first quarter. Meanwhile, China's SAIC, which has got the MG brand amongst others, sees sales surge. Some people think anchoring's easy, but when your producers try and wrong foot you on the last headline with SAIC, sea sales surge, she sells seashells on the seashore.
Yes.
Yeah, I know what they were trying to do. They were trying to flummox me. Don't need nobody help normally. Good morning, how are you?
Very well, thank you.
Good. There is so much going on. We're getting an enormous roster of corporate data, economic data, and then we've still got the popcorn show, which is the Trump administration as well at the moment. Where do you want to start?
Well, actually, I think the corporate earnings are fascinating because you get the sense after everything had sold off to a large extent that there might be room for the brokers to see some upside, particularly as the earnings were rolling through. Yeah. But the reality is we're now just compounding some of the issues that some of the corporates have had in their own business. And today's going to be fascinating.
Yeah.
We've got a bit of pharma, we've got a little bit of consumer.
Yeah.
So we're going to see just how the consumer is holding up. And I think if you've seen the PMI data recently, it suggests that the consumers are now actually rolling over, but the services data is being impacted by that weakness in consumer confidence. So that's going to directly come through in some of these releases.
I'm just relieved.
About what? Well, it's not tariffs. Okay, rule that out.
No.
Is it the bond market?
No.
Stock market, that went up yesterday.
No,
not that.
not worried about that. I'm just relieved. I mean, a large amount of our audience, I think we pride ourselves on probably having the biggest C-suite audience of any channel out there as well. I know, with respect to a lot of other great channels out there, we do kind of try to attract the C-suite, and we succeed in that as well. But I'm just relieved for all of you in the C-suite, because I was worried about you guys. Have you seen the latest pay figures?
Oh, right.
No, because, they're having a hard time, They're worried about the economy, they're worried about their business, they're having layoffs there. But thank God the C-suite is manfully getting through this as well.
What's a bit backward looking,
The
isn't
latest pay, well, not really, it's the first quarter.
Well, it was last year, so they might want to bank it because next year may not look quite the same.
Let me just do this quickly before we move on to serious stories. Oh, thank God, this is, I picked up the FT copy, it's everywhere. This is according to ISS Corporate. Thank God, British CEOs. Oh, well, just good luck to you guys, you ladies and gentlemen. Their pay is up 11% on the year in the latest data. US CEOs, pathetic, only up 7.5%. But before you worry, on either side of the Atlantic, there's a little bit more nuance to this as well. Your average British CEO is now on it's quite pathetic, really. I think you guys should be paid more. $6.5 million, whereas, thank goodness, our dear friends in the S&P, doesn't matter if you're good, bad, or whatever, $16 million each. Thank God you guys are looked at. I was worried about you lot in these current times.
Well, it was a decent year for the UK stock market last year,
Really?
if you want to talk about
I must have missed
the UK.
that. Were we up?
Yes, we did very well last year, but this year again, so you might want to hold on to some of those pennies, because this year it might be a very limited returns, and what are those bonuses going to look like?
Well, thank God they're earning some good dough, to see them through these troubled times. Right, let's move on. Back to Trump. We haven't mentioned him for 2 minutes. The Trump administration could reportedly slash its tariffs on Chinese imports in a bid to de-escalate tensions with Beijing. We kind of knew that yesterday, didn't we? Anyway, some goods seeing duties cut by more than half. That's according to the Wall Street Journal, which is quoting people familiar with the matter. I'm glad someone's familiar with the matter. The rest of us are completely in the dark. Anyway, with one unnamed senior official telling the newspaper, I think Wall Street Journal call themselves more than newspaper these days, but anyway, telling the paper levies are likely to come down to between 50 and 65%. I think that might be still quite a large amount for the Chinese to digest. Anyway, Trump and the Commerce Secretary Howard Lutnick, you know Howard Lutnick, he was the guy who was holding up the board next to Trump in the Rose Garden, gleefully smiling. Anyway, they shared their thinking on China in the Oval Office on Wednesday.
Well, that depends on them. We have a situation where we have a very, very great place. It's called the United States of America, and it's been ripped off for years and years. These people know it. We talked about it before you came in. We've been ripped off by every country in the world, practically, and friend and foe. And we're not doing that anymore. So what's happened is Howard, how many countries have we spoken to already? 90. And they all want to make deals, and we're going to make deals, but they're going to be fair deals. They're not going to be rip-off deals.
Just remember, dear American consumer, you've been so ripped off that the rest of the world has sold you the goods you want to buy at a cheaper price than you can make them yourselves. It's the truth. You know it. Anyway, you've been ripped off for years. You're not going to be ripped off anymore. Treasury Secretary Scott Bessent telling Fox News the US isn't looking to unilaterally lower tariffs, but did call them unsustainable.
Well, so what are we left with? I mean, we're talking about...
Do you know?
Well, this is the point. So 35% levies for items the US deems not to be a national security threat.
35%.
Well,
so just confirm, that's a third extra on the price for everyone buying the goods.
So we've heard all along that 10%, well, the merchant maybe can wear some of that margin hit, but it still gets a little bit tricky. But at much above that, it becomes very difficult to do business. So that is a fairly steep step up. How much of this is substitutable and how much of it is just simply going to be passed on to consumers. And then you've got the 100% clearly for items that are right in the firing line for the Trump administration. The other part that gets confusing is they're talking about the bill proposed phasing in those levies over 5 years. So what, we go back to zero, but then we phase in the levies because already we're at triple digit level. So are we going that way, then we're going that way, then we're going back up that way, but over 5 years? I mean, that is thoroughly
10 out of 10,
confusing.
Karen. 10 out of 10 for trying to rationalise all of this.
Yeah, but the other point that comes up is, how is the art of the deal going with the Chinese? Is that a whole new chapter? It works for some people who are very rational individuals and think, look, is he going to do that? Oh, quickly, I'm going to fold my hand and I'm going to just go with the Trump administration because I can't take those tariffs, versus the Chinese are just stonewalling, aren't they? The Chinese are sitting there and they're ratcheting up their tariffs. They're not having a conversation, to the point where it was suggested from the Trump administration that Xi and his diplomats might want to have a conversation with the Americans. So the Chinese, to me, are just going somewhat cold on the administration, which is very different to the European approach.
Thank God we've got the foreign ministry at 8:30 every day, which gives us a lambasting about how bullying the Americans. Look, the truth of the matter is, no economy in the world can do this without America. It is the most important economy in the world. That is the caveat for what I'm about to say. It's going to be painful for every single nation on the planet as well. We get it, okay? I'm not being glib about the cost.
You're saying we didn't need that board. We didn't need to see that the board was
there's Lutnick's board again. Thank God for that, because us idiots out there didn't understand mind you, none of us could read it on the day, could we? All like, well. Anyway, not even you millennials with your young eyes. But the point is, this is affecting nearly 100% of stuff coming into America at this rate. I mean, it's basically across the board. He said 90 countries, 185 have got tariffs on them as well. It's affecting pretty much everything that comes into the States, pretty much. But for the rest of the world, it's only the States. And the States is stunningly important for all of us. But it's not like we haven't got a trade war with China at the moment if you're in Europe. And you haven't got a trade war with Canada or Mexico or South America or Southeast Asia. So there are mitigating factors for the rest of us. The fact that this is not a global trade war. And I say not yet, because who knows how this can happen. So the rest of us have got other parts of the world where there is stability and no trade war, whereas America, it basically has declared a trade war on everyone. And
well,
there's the problem.
Exactly, and the reality is trade's now going to start to dry up in some areas where some of the stockpiling has happened.
The shipping data is off the scales.
And if there's not enough reversal on some of these tariffs, then that trade, where does it go to?
No, but it's art of the deal, Karen. It's art of the deal. They're so smart, it's art of the deal. It's not U-turns, not U-turns.
Trump has reportedly, though, walked back another facet of his tariff policy, with the Financial Times reporting that he could spare automakers from his regime's most aggressive levies. It says Trump is planning to exempt car parts from tariffs on China, as well as those on steel and aluminium. But automakers would still have to pay the 25% levy charged on all imports of foreign-made cars. Well, a separate 25% charge, which comes into effect on the 3rd of May, would also remain in place. This after weeks of lobbying from the industry. If enacted, the move would mark another climb down after laptops and smartphones were exempted from so-called reciprocal tariffs. The FT report came out after the US market closed. US listed auto stocks are little changed in extended trade. We'll just add this to the very long tariff list.
Trade tensions have dominated discussions at the IMF and World Bank meetings in Washington, D.C. Of course they have. Our very own Caro has been talking to European officials about risks posed by Trump tariffs and the potential for a deal with the United States.
We need to engage in an open and frank conversation amongst the two sides of the Atlantic, because there's a lot to lose if we do not get into a fair and balanced agreement. I mean, there is this specific figure, which is 4.5 billion euros on a daily basis across the Atlantic in terms of trade in goods and services. That's a treasure that we need to protect. And this is how we face these negotiations from the EU side, with an extended hand to reach an agreement, but it has to be a fair agreement.
We're not going to do bilateral deals. The European Commission is the person to go to. And then the European Commission has said we can retaliate if we have to, we can de-escalate, we prefer to, and we can offer trade deals, which is our preference.
We should probably mention that Spain was one of the only countries there that had an exemption. It was actually out of the mix of most of the growth forecasts coming down. It was still an outlier. It was up 2.5% growth forecast for this year, 0.2 percentage point increase. So it's still seeing resilient growth. Very strange, so probably worth pointing out. We've got earnings crossing now. Let's push on to Roche. The numbers we are seeing from the big pharma company as it kicks off a lot of the earnings this morning. So we've got Q1 group sales at 15.4 billion Swissy. The outlook for 2025 has been confirmed. Group sales grew by 6%, it seems, at constant rates. So I'm going to be cautious with that because that looks like it's got a slight typo next to it, thanks to the wire service. In terms of what we're seeing elsewhere, those are most of the lines so far in English that we're getting this morning. So we might just pause that there and come back to it when we get a little bit more. We're expanding our already strong US footprint. Weiter Saturation, Deutsche Biosimilars.
Yeah.
Is that German?
Don't know. It's the way you pronounced it. It could be anything.
Oh, thank you.
No, sorry.
Then there's also French. We have it in French as well.
I've got it in English. I've got it in English if you want. Roche confirming first quarter sales up 7%. Yeah, expanding. You got that one? Expanding US footprint?
I just said that one.
We are expanding our already strong US footprint. Pharmaceutical sales up 8%. Outlook confirmed. First quarter sales 15.4 billion Swissy.
Said that.
Yeah. You got that one?
I've said those ones.
Well, I've only got my service has only given me the English. Maybe it thinks you're multilingual.
Yes, it's well versed with my talent with languages.
I'll do Nestle's. Nestle.
Is that in French or is that in German?
Anything you like. Roundtree Macintosh. Anyone remember that one?
Oh, yes.
You've got to be old and British to remember that one.
Not old and British.
Roundtree Macintosh.
Made it all the way to Australia too, would you believe?
When did Nestle buy Roundtree Macintosh? I'm going to say 1990, something like that. I don't know.
I want to say an 80s figure almost.
Yeah. I will have a look at that one after. Nestle, which owns Roundtree Macintosh, which is an old, was it Rolos, wasn't it? Yeah. Expects improved organic sales growth in 2025. Expects 0.7 billion Swissy of cost savings in 2025. Organic growth, it's below where they want it. They want it 4% plus, but it's 2.8% in the first quarter. They are saying they're delivering broad-based growth, executing on the strategy. Interesting, here you go. Key growth drivers. Confectionery and coffee led by pricing. Or may I argue that it's also led by shrinkflation? I may or may not have bought a little chocolate bar in a well-known supermarket on the way back from supper yesterday.
I'm sure you weren't the only person doing that yesterday.
It was tiny. It was literally half the price of size of what it used to be, and yet the price goes up.
I spent a lot of time yesterday reading the broker report on this sector from the United States, and one thing that jumped out was that if you don't have market share, the organic sales growth in this environment will be very, very difficult to achieve. So you look for the biggest of the bunch, and those who've already been executing fairly well. That was sort of one of the big takeaway messages.
Who do they like?
Well, I think Nestle would sort of tick the box, but this was purely focused on some of the US names. But the categories obviously get quite challenging from here. So where you are focused again, those wellness trends, not necessarily the chocolate, but the health and wellness trends, were still quite a significant driver for some of these businesses.
So getting us, rather than to have natural protein products, they all want us to have highly processed protein products.
Exactly. Well, less salt, less sugar, and anything else that ticks the box.
There's a lot of other letters in there I don't understand.
Coming up on the show, we'll be taking a run at sports giant Adidas as it releases its Q1 earnings preview. Plus, we'll be checking in with Lynn, who is driving our coverage at the Shanghai Auto Show, and we'll bring you an interview with Lars Machenil, the CFO of BNP Paribas, after it posted a first quarter earnings beat.
Well done, Renault. I don't know how you did this, but they've said outlook for 2025 confirmed. Come on, ladies and gentlemen. Can anyone actually confirm their outlook for 2025? Got to be honest, I don't know if anyone can. Oh, here we go. There's caveats galore. In a very unstable macroeconomic environment, decided to proactively engage in additional cost reduction measures. Okay. First quarter automotive revenue, 10.13 billion euros. The consensus was 10.26. What else have they said? Worldwide sales were 565,000 units, give or take, in the first quarter. We prefer to be careful on costs, could delay some projects that are not major, such as new launches. So, yeah, okay, you're confirming your outlook, but you're cutting costs and you're not sure about your launches. We don't see any impact from tariffs yet. It's because they have virtually nothing in the States, isn't it, really? No supply chain disruption at this stage. Electric vehicle market share. That's another issue, actually. Yeah, I'll come to that in a few moments' time. Okay, so yeah, slight rise in Renault figures there as well. They've got one unit called Alpine, which is, they make really swanky cars. They're very, very nice cars. And I think Alpine, if I'm right, was the biggest gainer in the latest data out of Europe. But I'm going to do a big read on it at the moment. We've got the latest quarterly and monthly car registrations. So if you look at Renault Alpine, if you're not aware of this group, it's the kind of the sports car part of Renault. They're really nice looking cars, but it's by far the best performer in Europe in the latest data.
I think this is a fascinating line, and if I just drag that out about delaying new launches, I think that is absolutely fascinating, because we've seen recently from the Tesla story that the lack of innovation coming to the marketplace may be having some impact on the sales figures. So if we're now seeing one of the consequences of the tariff situation, meaning that the decision that automakers make is to delay some of those new launches, what does that do in terms of entrenching the rise of the Chinese that are throwing new cars at the marketplace every other month?
It's a very good point.
I mean, let's watch that if it's just Renault.
But Renault has been criticised for not having a direct presence in the States. And now, wow, they look like geniuses. I'll go through the data and I'll tell you the Alpine figure as well in a minute. New car registrations across Europe rose in March, with fully electric vehicle sales rising more than 20%. Okay, good news. Renault and VW were among the best performers in March. I'll break out and do the Alpine figure. I've kept you on tenterhooks. Up 139%. Isn't that amazing? 139% for their Alpine unit. And Renault itself, its own brand, 17% higher. They were dwarfed, the broader figures, though, by the Chinese car maker SAIC. They own the MG mark. Anyway, new car registrations rose almost 75% on the year for SAIC. Right? The reveals there, though. Look at that down underneath, though. Tesla suffered its third straight month of massive sales decline. It weren't just Tesla, there were others there as well, with January to March sales down 45% a year. I'll tell you, Jaguar was even worse, actually. in Europe. Anyway, look, let's move on, because the increased competition facing European car automakers, which Karen just mentioned, the competition's coming from China, isn't it? It's a full-on display in the Shanghai Auto Show, where more than 70 Chinese and international manufacturers, although, as I learned yesterday, not Tesla, are showcasing their latest model. Lynn joins us for day 2. Lynn, how's it going?
There's a lot of buzz, Steve, as you would expect for any auto show. This is now the biggest in the world, and we're talking about an exhibition space that's around 360,000 square kilometres, so it's absolutely massive, and there's just so many exhibitors here, so eager to show off all of their new models. And, we are continuing to watch this trend here of some of these foreign automakers that are here trying to win back the Chinese consumer and really focusing in on products, targeting what they want, which is, according to people I've been speaking to, it's about connectivity, it's about the software here, not so much the fit and the finishings anymore, about the digital experience. I was just having a look, for example, at one of the most premium electric vehicles that SAIC, which is a brand under Geely, owns, and they had a 43-inch television with an inbuilt refrigerator. They had seats that reclined 180 degrees with a massage. But I digress. My point is, obviously, the competition, clearly, as you guys have been discussing, extremely intense in this space. But it's not just about electric vehicles here. It's also about the future of mobility. It's about, autonomous vehicles. It's about robo-taxis as well. And I got a chance to sit down with the CEO of WeRide, Tony Han. Just to put into context, WeRide is one of the top 3 players in the Chinese market, and China is well ahead in terms of robo-taxi adoption versus other markets. I asked him, though, because all of these companies are spending tremendously on R&D, on when, they could see potentially a break even in the horizon. He says to me 5 years, but it's complicated. Let's watch.
If the cost of hardware is cheaper than local labor, then that's where you can make the profit. And you can see, if you draw these things into two lines, horizontal axis is time, and with the development of time, the cost of labor is continues growing, and the cost of the hardware is continues dropping, and the difference will be the margin. So once you pass that transcendental point, the turning point, and then the margin can only go larger and larger. So in this way, I just want to make sure the curves are smooth, are stable, because maybe 2 or 3 tragic accidents will destroy the whole industry. We don't want that to happen. So we want to move step by step and keep safety in our mind. But at the same time, we also keep the profitability in our mind. But we know we will reach the goal. I'm quite optimistic. But during that path, we need to be very, very careful and invest a lot in R&D.
And, when we talk about robo-taxi and autonomous mobility, I mean, Elon Musk back in the headlines talking about his robo-taxi business and where he sees that future growth. I mean, it's a true paradigm shift, and there are huge structural barriers still, whether that's still in terms of proving that technology fully, as well as, of course, safety and regulation. And these are some of the things that the Chinese companies in this space are also contending with as well, guys.
Lynn, thank you very much for bringing us the latest there. Elsewhere, shares of Boeing closed higher after the plane maker narrowed losses in the first quarter and said it will seek regulatory approval to increase output of its 737 MAX jets. Speaking to our US colleagues, the CEO, Kelly Ortberg, said China had stopped taking deliveries of their aircraft amid the tariff turmoil, with those jets potentially being redirected to other customers. Ortberg also laid out how the company is navigating trade tensions.
We think we'll be able to manage this within our cash flow plan, and it won't deteriorate from that. Recognize that there are drawbacks on some of the tariffs. So the tariffs we're paying, for example, in Japan and Italy, for those airplanes that we deliver outside of the U.S., we're able to draw that back. And 80% of our aircraft right now are going outside of the U.S. So we think we'll be able to manage through the input tariff environment.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.